What you've seen historically is that, for instance, Bitcoin tends to do well as people come out of that market, right? In 2022, when Russia invaded Ukraine, we saw risk assets sell off, but then we also saw Bitcoin enter the 2023-2024 run. If you go back to the global financial crisis, Bitcoin didn't exist, but people sold gold initially because they wanted to pivot into US treasuries because they were short term and liquid. But then, of course, gold went on a substantial run, and Bitcoin, of course, was born and followed from that. So I do think it happens. I think it's really a liquidity trade. I need to get my hands on liquidity. I'll sell everything that I can just to hold something that's relatively stable. And then over time, people calibrate and think, yeah, these decentralized worlds are more important. Bitcoin is more important in this fractured world.
What if adoption, innovation, or even technology aren't the main forces behind the next cryptocurrency bull market? What if it's something much more potent, like unrelenting money printing in big economies, shifting geopolitics, and worldwide uncertainty? What if the true cause of Bitcoin's volatility is long-term holders stealthily taking profits after years of accumulation rather than merely institutional investors joining the market? Matt Hougan. In this video, we'll break down his perspective on what's really happening beneath the surface of the crypto market. We'll explore why macroeconomic pressure and global conflict could actually strengthen Bitcoin's long-term narrative, how investor psychology continues to shape every market cycle, and why institutional participation is only one part of a much larger story. We'll also look at whether Bitcoin is transitioning into a new phase of maturity, how supply dynamics from long-term holders impact price action, and why many analysts believe we may be in the early stages of a broader bullish cycle. If you find value in this content, please take a moment to like the video, subscribe to the channel, and turn on post notifications for more videos like this.
I mean, I think it is happening. This is sort of there's a short-term, long-term response in the markets that is classic. So on a small level, what you see is, the initial panic and people sell everything and buy treasuries because they want to be liquid. And that's just a liquidity trade, right? The dollar is not going to collapse over the next 2 weeks. So if I need liquidity, that's a good place to park it. What you've seen historically is that, for instance, Bitcoin tends to do well as people come out of that market, right? In 2022, when Russia invaded Ukraine, we saw risk assets sell off, but then we also saw Bitcoin enter the 2023-2024 run. If you go back to the global financial crisis, Bitcoin didn't exist, but people sold gold initially because they wanted to pivot into US treasuries because they were short term and liquid. But then, of course, gold went on a substantial run, and Bitcoin, of course, was born and followed from that. So I do think it happens. I think it's really a liquidity trade. I need to get my hands on liquidity. I'll sell everything that I can just to hold something that's relatively stable. And then over time, people calibrate and think, yeah, these decentralized worlds are more important. Bitcoin is more important in this fractured world than it is in a relatively stable one. And I think people do recognize that. I always tell people it's like you have to imagine a scale where you put a rock on the scale and it sort of tilts, and you put a rock and it tilts a little more, and you put a rock, and eventually you put enough rocks that it hits the ground, and that's your bottom. I think there's lots of indications that we're close to a bottom, right? So some of the indications are whales stopped selling, right? Actually, at the end of the year, they became net purchasers for large wallets and long-term holders. That's important. The futures basis shrunk to almost a vanishing level. And what that tells you is that there is no more space for people to paper sell their Bitcoin through option overlay strategies, which also has been one of the ways that people have been selling. So that's another important indicator. And then outside of Bitcoin, we've just gotten so much positive news about crypto and stablecoins and tokenization, which all bleeds into Bitcoin as well. So I do think we're in this process of bottoming. I actually feel very optimistic about where crypto is going. I think it's going to catch up to gold. I think it's going to be a good end of the year. Could it fall another 20%? Of course. But I'm for the first time seeing the sentiment shift and seeing people get much more constructive on the space. Yeah. So let's go from like certainty down, right? The certainty is the thing that I just mentioned, which is wars are expensive. Like missiles are expensive, bombs are expensive, wars are expensive. And this doesn't look like it's going to be a Venezuela type situation. Of course, I'm not a geopolitical analyst. I could be wrong. But I think the market is starting to price in the idea that this could be an expensive war, and that leads to money printing, right? Often wars are actually off balance sheet. They're sort of this like separate line item for the US budget, but they can measure, trillions of dollars. Think what the original Iraq war cost us, trillions of dollars back then. Now it would be tens of trillions of dollars. So, the surest thing is money printing. Beneath the surface is sort of what you're hinting at, which is we've definitely seen some interesting chatter from analysts about the idea that the U.S. wants to disrupt the flow of oil and energy into Russian and Chinese markets and ensure that those operate within the sphere of influence of the U.S. and the U.S. dollar. I think that is probably happening. From a Bitcoin perspective, it points to one of my long-term theses, which is the world is sort of fracturing and getting more dangerous. And in that world, the role of a non-political currency probably becomes more important. If everyone is sort of comfortable with the US dollar, then you don't really need a useful non-political currency. It's only when the world has the US being very, offensive about the role of the dollar, and then China also wanting to be on the offense for the role of the yuan, and maybe other countries wanting to be the offense on the role of their currency, that you create a space for a non-political currency, which is what Bitcoin is. And so I think it's opening up a space for that asset in the future to play a role in global trade and things like that.
One of Matt Hougan's simplest but most powerful ways of reading market cycles is by watching how prices react to good news. In his view, the reaction matters more than the news itself. Even significant positive developments frequently fail to influence prices in a deep bear market. Positive news is disregarded or ignored, investors are wary, and attitude is gloomy. However, in a more robust, early positive climate, the same news actually causes the market to rise as confidence gradually recovers. Hougan thinks we might be witnessing that change right now. For instance, markets did not panic as they would have in the past when geopolitical tensions in the Middle East recently escalated. Rather, they showed more resilience than anticipated and stabilized rather rapidly. During times when traditional markets were closed, cryptocurrency traders increasingly resorted to decentralized platforms like Hyperliquid, demonstrating how decentralized finance technologies are becoming more useful in actual trading situations.
Look, one of my lessons from the last year is that the four-year cycle has a strong psychological grip on investors and is therefore reflexive. In other words, the reason I think crypto went down primarily was people were afraid of the four-year cycle repeating. So they created it by being worried about that. That's probably still intact. People are probably looking ahead to 2027 and figuring it will be a positive year for Bitcoin. So I don't think the four-year cycle is as strong as it used to be. I don't think the halving cycle is as strong as it used to be because the quantity of Bitcoin is lower that's being sucked out of the supply. But these things still matter. They matter from a behavioral perspective. And on the halving front, they matter on a supply perspective, right? There still is a reasonable amount of Bitcoin coming out of the ground every day that the market has to absorb. And when that falls in half, it's a lot easier for prices to go up. So I think those are also tailwinds for us, right? We're now in almost the tailwind phase of the four-year cycle. We're in the tailwind phase of the halving cycle. We have a tailwind on a regulatory perspective. There's just a lot of positive things to point towards. Yeah, well, let me give you a view on that sentiment question, and then we can zoom out. One of my favorite tells of where we are in the market cycle is how the market reacts to good news. When we're in the depths of a bear market or crypto winter, the market just ignores good news, right? Or you can see, really positive news about for Bitcoin, concern about the debasement trade. The market just doesn't care. So in bear markets, the market ignores good news. In bull markets, the market notices and rewards good news. And that's what I'm starting to see increasingly. So I know this is mostly focused on Bitcoin, but let me talk a little bit outside of Bitcoin, then I'll pull it back. Markets were closed when the US started bombing Iran. And traders pivoted to Hyperliquid, which is a decentralized exchange, because that was the only thing that was open, not just crypto traders, but macro traders broadly. And its price went way up. And that's a sign to me that investors are starting to recognize good news. Again, on Bitcoin specifically, we saw equity markets sort of stabilize. So it got a little bit more risk on. And then people realized that in the wake of most wars, you see significant money printing. That's what we've learned for basically every time there's been conflict in the Middle East. It's been followed by money printing to pay for that conflict. And people started to price that in, I think, into assets like Bitcoin. So when the market is rewarding good news, it tells me that sentiment has shifted and maybe we're out of the worst of the bear market. Doesn't mean we go straight up from here, but it means we're in like an early spring, maybe, where the market is rewarding good things. What happens as Bitcoin becomes more accepted and more grown is you have this easier and easier, more reliable default. And that puts a constraint on the Fed. So in the optimistic view of the world, in the hopeful view of the world, Bitcoin is almost never makes that complete takeover because it constrains the sort of traditional system in terms of how much it can abuse the market. I don't know if that's the world we'll get to, but look, all fiat currencies over history have died in spectacular hyperinflation. Right. Which I know is like part of the Bitcoin idea, but it's actually bad. Like living through that is generally bad for society. You don't want that. And so the hope is that it's not binary, that Bitcoin gets strong enough that it constrains the abuse of the dollar. And I think that's the chasm, right? It just needs to get strong enough to constrain it. And I think that's true, in Bitcoin and in other decentralized markets that crypto is creating. I align with the soft version of Cathie Wood's thesis, which is that if you thought Bitcoin was going to be used for payments in parts of the world in a relatively near term, stablecoins have clearly co-opted that use case, at least in the short term. And that probably incrementally is a negative headwind for Bitcoin. On the regulatory and policy front, I think crypto is just honestly sort of too impatient. Is my general view. Like, right, I remember as soon as the election took place, people were frustrated that Bitcoin wasn't literally the first thing the administration did. It had to wait a week for something else to clear before we got things like the strategic reserve. And that's because the world is complex, right? There's a lot going on. And if you look at what the administration has done from a regulatory perspective on establishing the strategic reserve and at least not selling its Bitcoin, it is now true that it's focused on the Clarity Act and focused on growing stablecoins and tokenization. But I think you just have to think that they can only do one thing at a time. I don't think that means that other things like working on establishing the strategic Bitcoin reserve as a law are off the table. I think it's just they're focused on this thing. Maybe one more piece of context. In the early days when the administration was working on like the strategic Bitcoin reserve, the stablecoin people were frustrated that they weren't focused on stablecoins, right? And then when they were working on the Genius Act, which was stablecoin focused, the tokenization people and the DeFi people were frustrated that they weren't working on tokenization and DeFi. I think the right framing is they can only do one thing. And they did a little bit of Bitcoin, and then they did stable coins, and now they're doing tokenization. And I actually suspect they'll get back to Bitcoin at the end. Maybe I'm too optimistic, but I think it's just staying focused on one thing at a time.
In his view, bear markets behave very differently from bull markets. When sentiment is extremely negative, even strong positive developments don't move prices much. The market basically ignores good news because investors are too fearful or uncertain to react. But in stronger phases of a cycle, the exact opposite happens. Good news starts to matter again. Prices begin to respond positively, and confidence slowly returns. He also cites more general instances from everyday life. Instead of a severe and long-lasting market collapse, things calmed faster than anticipated as international tensions recently increased. When traditional markets were closed, traders occasionally even resorted to decentralized platforms, demonstrating the increasing use of crypto infrastructure in real-time global events. At the same time, markets started to take into account a well-known historical pattern. Governments frequently boost money printing to finance spending during times of conflict. Assets like Bitcoin, which are seen as a hedge against currency depreciation, may be indirectly supported by this anticipation. Hougan does, however, also provide a crucial reality check. He thinks that the cryptocurrency sector is frequently very impatient, expecting significant improvements to occur right away. Due to several conflicting goals, governments and institutions move slowly even when favorable policy changes or regulatory advancements start. Bitcoin, stablecoins, tokenization, and DeFi are just a few of the several aspects of the cryptocurrency business that frequently take turns being the emphasis rather than developing simultaneously. Please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this.